Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 167. On today's episode, Cameron and I are going to discuss the bro fight between Elon Musk and Donald Trump. We're going to discuss AirPods, Warren Buffett stepping down, this little market melt-up we've had in the face of tariffs. We're going to discuss what you should do for your financial well-being first, especially if you're younger, trying to figure out what order you should go in. All of those on today's episode. So get your mind right and let's get to work. Well, welcome back to the show, everybody. Joined once again with Cameron here. I always think like we're going to be able to be like, all right, see you next week. We'll record another episode, and then a month goes by. So it's been a busy month of May. There's a ton of stock market stories to discuss. Have a lot for you here. There's Musk and Trump, Buffett, tariffs, all kinds of stuff. It has been action-packed. So where do you want to start?
I feel like every time we take some time off, there's just so much.
There's so much stuff. I will say one. I'm going to say one thing. So I went to Florida with my family. Drove, and I would like a public service announcement. If you drive in the left lane and do not move over, this podcast is not for you.
No.
God, man, like so many people who will not. They just hang out in the left lane. It like makes me lose my mind.
That doesn't bother me. It's the truckers. The truckers that hang out in the fast lane, not trying to target anybody right now, but that drives me nuts.
Yeah, I
just side by side, you can't get around.
There will be people who will be in the left lane, 7 people pass them on the right, and they still don't move over.
They don't get the hint?
No.
I think they just enjoy it. That's why they do it.
Okay,
just
I mean, what's
slowing everybody up?
Just the evil people.
The little bit of control they got in that situation.
It's the meme. Some people just like to watch the world burn.
I guess so. I don't know.
Speaking of people who like to watch the world burn,
transition.
Let's
I wonder where this is going.
Let's talk about the bro fight between Trump and Musk.
Yep, it's kind of crazy. The whole Twitter thing, or X, I guess, does not help at all.
No, it's not. I don't think it's ever a good idea to fight in public.
And also, too, I mean, I guess Elon's Twitter or his X account is hooked up to Grok, his AI.
Okay.
That will post on his behalf. Did you know this?
No.
Okay.
No.
So there's two big elements to this deal.
Okay.
Elon's picking fights with Trump. Not great, right? Mm-hmm. But he's also picked a few fights with some other people. But he's blamed it on that. He's integrated his Grok in with his posting abilities. So if it sees an opportunity to be funny, it will do it. So there was one, I mean, this sounds kind of made up now that I'm saying it. It sounds like an excuse, right?
Right, yeah, that's what I'm thinking.
But I guess he made one comment that was not good about a gentleman's wife, and he blamed it on Grok and deleted it. So
it seems like the greatest cover ever.
He invented the
right,
tool.
Yeah.
So it's like
it's just, I mean, it's one thing, but I also think about just the news media in general. So last Friday, I guess today's June 10th. We're recording this on a Tuesday, which is kind of off of our schedule. But like last Friday, I'm watching 3 different news outlets, and they have their cameras. I mean, this is like middle of the day, lots of other stuff going on, and they got all their cameras are pointed at the Tesla that's in the south lawn of the White House, wondering if Trump's going to move it, and then also talking about did Musk like shut it off.
So
they can't,
That's hilarious.
But it's like, I don't know, kind of maybe out of your age bracket, but like the Real Housewives of whatever county. To me, this feels like the male version of Real Housewives.
Did you see this happening?
Yeah, I did, but like I thought they would last a little bit longer.
What about the intensity of the reaction? I did not anticipate that. I think it's been much more intense.
I think I feel like it's a little temper tantrumish,
we're past that.
Yeah, I thought they would get a little bit more done. Did it last as long as you thought it would?
I didn't know how long it was going to last, but I knew that there was that limit on how many days he could work as a outside counsel for the president.
Right.
So I knew it was going to end at some point.
Yeah.
I didn't know it was going to end like this. I mean, they're both type A's, right?
Sure, for sure.
Big personalities. That's tough. But also, it's like I think what started the whole what's going on here is he had that press conference where Elon had a black eye. Mm-hmm. Did you see that?
Yeah, I did.
And he said, "Oh, his son punched him or something like that." Right?
Yeah.
So apparently, there's some more news on that it might have been an actual altercation, not between Trump and Elon, but Elon and one of, I guess, the staffers or somebody.
I was hoping you're going to break some major news here on the podcast that Trump punched him in the face.
Professor, here's it first.
Yeah.
But
I don't know.
So like that kind of started the whole thing, and now we see Elon tweeting stuff, and then now what's Trump last comment on him that he's
looking at all the contracts and all the government contracts, the SpaceX contracts. The thing about it is like they're both the type of personality that are willing to go for broke. Like, you know what I mean? Like Musk, I mean, he rolled all the PayPal. Yeah. I mean, he rolled all the money from PayPal into Tesla. I mean, bet everything. I think it's simmered down. He deleted a lot of the tweets. Somebody
did delete them all.
Somebody probably finally reached out, but I mean, it's just, man, what a world we live in.
Elon is definitely not somebody you want to get into a situation with because, I mean, he's the richest man in the world.
It'll be interesting to see if it dies down or if he starts trying to fund a bunch of people for the midterms. I mean, it'll be wild, man.
Either.
I mean, it could be.
And he also owns a platform that a lot of people go to for their news.
Yeah.
So that's an issue.
It's just, boy, if you're a Tesla shareholder, I mean, bless you. Just bless you. What?
It's a roller coaster.
Yeah, it's a roller coaster.
But I think you got to expect that, especially when you saw him get involved.
No, you do. But I mean, like I've had conversations with clients, you know, and it's like, okay, if you want to own Tesla, and this is for basically anybody who wants, I mean, you have to realize like he's probably going to tank the stock twice a year.
Yeah.
Like on something. I just think like this year it's been it's been a lot.
That was the first, I remember it was one of your first lessons in financial management. We talked about Tesla and Elon.
Yeah.
And you said that it was difficult because Elon says one thing and all of a sudden it starts moving. And I think I made the joke of like, you got to put a cowbell on him. Like anytime he moves, you got to hear a little bit of bell go off.
Well, I mean, it's, rarely in investing do you have to worry about like, where you have a CEO that's that polarizing versus the stock. Like
Trump's the same way to a
no,
degree,
I mean,
right?
of course. I mean, yeah, I mean, that's what makes this so interesting for people. And it's like watching a train wreck, I mean, that's why people get interested. But can you imagine like the CEO of Ford or GM or something like that, acting like that? There's no way. I mean, it has to be somebody who's a founder that's changed an industry. Like it's a whole different deal.
There's only one person.
Right.
I can't think if you said, hey,
who else can do this?
I'd have to pick out of a hat. I would not know. I think Elon would be the only guy I could say that has the edge to do it, but also he just doesn't care.
Yeah.
But he's super effective. He's effective at what he did. I mean, we'll see actually how effective it is.
Yeah.
But he turns 24 hours a day into 48. I don't know how he does it, but he's a busy guy.
But I see like people like Musk, and it's one of the reasons like founder-led companies usually end up outperforming is they're willing to take chances that somebody who maybe became a CEO of a business later on doesn't have the ability to do. It's the same thing as like sometimes you see with clients, like business owners who made their own money versus somebody who inherited the money. Like their perspective on that money is completely different.
Definitely.
And I think you see that too when you look at CEOs and the ones that are running companies versus the ones that built them. It's a completely different perspective.
Oh yeah. And the other half of that too is they know what went into it, or they know, the
work.
Yeah, but not the quality of the work or anything like that, but like the levers that made that business a success. Where it's like you bring somebody else and it's like, all right, how are we going to make this more successful? And all they bring is like the last 3 companies they were a part of at a non-growth stage, at a mature stage, right? It's totally 2 different mindsets in terms of like, hey, we need to focus on this or whatever.
Yeah, that's true. That's a very good point.
Where do you see this as we're about to transition off? Where do you think this goes for Elon and Trump?
I don't know. I hope it dies down for a little bit.
I agree.
I mean, I just hope it dies down. Like I hope it like they give their, the temperature dials back on it. I think it'd be good for both of them and just kind of have like a little, hopefully it's just not in the news all the time and the festering of it and all that. But so hopefully there's like a little cool down period.
Yeah.
I mean, they both got a bunch of stuff to do. So,
they're a little busy.
Yeah. You would hope that, they got other stuff to occupy their time with. So what do you think about Mr. Buffett stepping down?
That's crazy. Yeah, we didn't go this year.
Yeah.
We usually go.
Yeah.
I think it was going to be different no matter what because, Charlie wasn't going to be there.
Yeah.
But dang.
Well, that's how it was last year when we were there. Charlie wasn't there. That was the first year he wasn't there.
Yeah, that's true. This was the first year they made the reel because they didn't have the video.
Yeah, they didn't have the video. He shortened the Q&A. I mean, it was definitely different. I mean, most people didn't know he was going to announce his retirement, but I'm not, he's 95. I mean, I don't think surprised is the right. I mean, some people say they were surprised, but it definitely is like the end of an era for sure.
Oh yeah. I think you said it too. I'm sure there's a part of him because he probably could have kept going. Let's call it how it is. He probably could have kept going because he enjoys it so much. But I think there's a part of him that missed doing it with Munger. That he's
the fun kind of.
It's weird. Like it's a constant reminder of showing up.
Yeah,
and you're like, it's not the same anymore.
Yeah, I think there's a lot to that, and also too with him being that age, and it's a way for him to kind of make the transition where it isn't so polarizing on the day that he passes away or whatever. You know what I mean? Like he actually gets to control it versus nature controlling it, or what?
Probably a good point.
You know what I mean? Like it won't have the shock factor that just his death would have if he hadn't have stepped down a little bit. But it'll definitely be interesting to see what happens next year. Like if they do the meeting, he already said he's not going to be there if they do it. So like we know a lot of people in the investing world, and like they do a lot of meetings at that meeting because so many people come to it. So it'll be interesting to see if it still stays that kind of community or like the joining of everybody doing all those meetings at Omaha in Omaha because they know that everybody's going to be there.
I'm sure there'd be a little bit of a pullback, but not much. I think the whole idea of that is it's great because you see them and they're the main show, but there's also something to be said about Guy has an awesome event every year.
Right.
That's super cool. That just creates, everyone has that habit of going to that every year.
Yeah.
I feel like people would be missing out if they did not do that.
Yeah. It'll just be interesting to see how the stock performs, all those kind of things. That's a good question,
I mean, it's crazy because all the headlines this last year and a half are Buffett knows something that nobody knows because he's stockpiling cash. He's stockpiling all his cash. And I looked at that, and I think we were on the same page in this one. I'm not going to speak for you, but if you're thinking about your plan of transitioning off, you want to make sure that next generation has enough cash to do stuff with. They got optionality.
Well, that and that his shares are going to go to charities and they're going to want cash. So this allows them to not have to sell shares in order to have cash to do some things in the beginning.
Yeah.
So, I mean, I think there's some of that. I don't think there's anything. I mean, obviously there's nothing wrong with the investments, the strategy, all those things. It's just, when you think about we just talked about Elon Musk, or we talk about these polarizing CEOs, how much are investors in the stock because that person is there,
the brand,
and then the brand, and then what happens when that person or that partnership is gone? It's just a little bit different,
Yeah, it's going to be different.
We'll see. And, you have people like Bill Ackman trying to take over Howard Hughes to try to, create another mini Berkshire Hathaway. So, will there be somebody who tries to step up and fill that void? I mean, it'll just be interesting, the next 10 years, what that looks like.
He's leaving. And I mean, he's still got hopefully he's got years ahead of him, but he left a great model. You know what I mean?
Hard to replicate, true.
Hard to replicate, but he had a great model. And I think the reason why it's so hard, I think you'd agree with this, is it's not what it's glamorized to be. It's always every time we see something in the investment world, a show like Billions, you see a guy yelling, saying, short nat gas or whatever, go crazy. And, then he becomes this big time investor in the show. But in reality, Buffett, Munger showed up to an office with 8 people in it, and they just read. They read earnings reports. They read things. They didn't have a Bloomberg. They did all this stuff that people.
Not a Gucci belt in sight.
Not a Gucci belt in sight. Yeah, none of that. And it's also I think people idolize the chase of the finance world and investing money, but really that's what gets you hurt.
Yeah, it's they glamorize all the bad habits that are out there.
So hard because you're fighting that. You're fighting that mentality of and they just stuck to can you imagine I mean, we do it now, but like I'm young in my career. You're relatively young in your career. You know, you're a little older than me, but they did it for so long. They showed up to that office every day, reading the same type of material every day.
Yeah, it's not even that to me. It's the fact that like Buffett didn't change his, like he lived in the same house since like 1955.
Yeah.
Even Munger went out and bought some vacation homes. I mean, like, you know, but Buffett, I mean, like to not really change your, you know, to never, like, I don't know what you would use, level up or whatever, like people, you know, he just didn't, like, he didn't do
lifestyle creep.
No lifestyle creep, which, you know, I mean, one of the reasons I work so hard is to have a little lifestyle creep.
Yeah.
I mean, but you know,
so
that's
good.
You know, I mean, so I don't know. It is kind of different. But I will say, like, I still think, like, when you think about investing, you think about the principles that they put forth. I think even over time, they are so important because I think for your generation, it is so hard because so many people are on social media, which we're doing this for social media. So it's, you know, there's that, but everything looks so fast. You know, like it's so fast and shiny and like you can do this. Like I've already been hearing like on the radio, like today I was listening to Bloomberg in my truck, and there's already some system using AI and they'll let you trade using their AI system. And I'm like, that sounds pretty dangerous. I mean, I don't, you know, I haven't even looked into it, but I'm going, you know, there's a lot of ways for people to get hurt. And when you look back at like the lessons that Charlie and Buffett put out there, I mean, they're so timeless. You know, that people really should go back and look at some of those things. And you brought it up in the beginning, but it's, you know, nobody wants to get rich slow.
No.
I mean, everybody wants to get rich quick.
Everybody wants to be Gordon Gekko.
Yeah. And there will always be, you know, so that kind of stuff is just going to be, it's just so glamorized but it's not kind of, it's like a mirage.
I forgot where I heard this from, but it's kind of along the same lines. The barrier to entry in the investing world is extremely low. The barrier to entry. I mean, if you have $100 or whatever, you can invest. The barrier to be excellent in the investing world is extremely high.
Yeah.
And I think about that and you apply it. It's like the same thing.
Right.
Like, to be excellent, there is an element that they have proven, which is consistency over intensity, right? They were consistent. Like,
right.
It's tough because as I'm thinking about this more and more, a lot of this job too, it's not activity based. So like with all this market activity and there's volatility and, you know, some people are making money, some people aren't, you know, there's that part of you that's kind of like, I should be doing more, but it's not, we're not in the game of like moving papers from one side of the desk to the other and calling it progress. Mm-hmm. You got to make smart long-term decisions.
Well, and so I get questions from young investors, people all the time asking like, where should they start? You know, and it's always like, okay, they know, most people know like, okay, I need to pay down my debt, not have credit card debt. You know, like if the average for the S&P 500 is 10% and you're paying 27% in credit cards, okay, you're not going to win that battle. Yeah. So you got to pay down your debt. Most people know they do their 401k, they match it, you know, and then it's kind of like, okay, what should I do next? Like, what's the next thing I should do?
Yeah, you're making that seem real simple though, because sometimes it's not.
What?
So
paying down your debt.
There's a difference between knowing what you should do and what you actually do.
Oh, for sure.
And I think like, you know,
are you kidding me?
Economic behavior side of it, right?
Yeah.
Like, well, why? Like,
I teach people all the time. If I teach a class of 60 people, I'm really teaching 5.
Yeah.
I mean, like, you know how many people I've been like, hey, if you read this book, it'll change your life. It's 3 pages. They'll be like, okay, I'll read it. And then they never do.
Yeah.
I mean, like, it's just like, that's just how it works.
It may even be more gray area. Like I've talked to people recently. There's like, hey, I have student loans, right? Or for the longest time was, you know, the student loans are going to get forgiven. So I'm not going to be putting money into paying off my debt.
That was a dangerous bet.
I'm going to put it into Bitcoin.
Yeah, that was a dangerous bet.
And depending on when you bought, maybe you made some money, maybe you didn't. It didn't matter. But the name of the game isn't how can I make $1? It's how can I make $1 with the least given amount of risk. That's how I think you set yourself up well.
Well, yes, but that's not how most people think of it. Most people think, how can I get money without having to do more work?
Yeah.
Like it's always like shortcuts, quick money, not like I'm young and I live in this amazing country with a gig economy and I can actually have 2 jobs.
Yeah.
And that's never, I mean, you could work, you could do like Uber Eats on the weekends. You could do so many different things to get things paid off, to get started, whatever.
I agree.
But most people are not willing to pay the price.
To answer your original question, right, of like the necessary, like the steps in the beginning, and this is obviously my point of view, I think there's the easy answer and then there's the more difficult answer. From my experience, the easy answer is after you pay off that debt, right, and you are debt free, then you want to start saving money that's towards your future. So the 401k is a great way to start because sometimes your employer will match it, right? And then depending on where you're at with the income, what you project that income to be, maybe a Roth IRA could be an option there. And then from there, it's an investment account, right?
Yeah.
Investment brokerage account. The trick there is you're going to have to, when you make decisions in that account, I'd really try to adopt the idea of I'm buying something for the next 5 years. So that's the answer I think everybody's looking for, the easy answer.
Right.
The hard answer that I think I didn't realize until a few years into it is you really need to sit down with yourself and figure out what it is that I want out of life.
True. Yeah.
Because it may not be, I want $1 million portfolio, or it may not be, it may be something else, right? So you gotta align yourself to your goals and what you want that to be. And that's sometimes difficult because.
Yeah. I think that you brought up a good point too, that I think most people can make a takeaway from this is that, lengthening your time horizon.
Yeah.
5 years from now, what you think, versus like 5 weeks from now. Because even like if you look like what we've talked about, how like volatile this year has been with Trump and tariffs and all this kind of stuff. And then you look at just what happened over the we've basically, since Trump has done the tariff pause, we've basically had this melt up where the market is, I mean, we're not having a banner year, but we've recovered a lot, or most of the indexes are even for the year now.
Call it how it is.
Yeah.
We bounced back quicker than I thought.
Yeah, for sure. Yeah, I agree. And we could, depending on how it goes over the next week and the big, beautiful bill and all that kind of stuff, we'll see. But it is kind of this wait and see moment. But again, if you're somebody who's young and you want to start investing, I mean, you got to have that list of companies that you want to invest in. I mean, you got to know where you want to invest money. And I know for some people that might seem kind of out there because you're dealing with different financial challenges and things like that. But it is something that you have to be thinking about so that when the opportunity presents itself, you're ready and able to take advantage of it.
And maybe it's not even that. Maybe you're just like, hey, I'm not a finance person. I really like my marketing job, and that's what I'm going to spend all my time doing. I don't want to look at companies. Then you just buy the 3-man indexes.
Yeah, you just hit the easy button.
And then you can figure out there's some other accounts you didn't talk about, but HSA is one that I only know one other person my age that is contributing to their HSA account.
Okay.
And that's solid. I feel like if your company, especially if they match your contribution, it's like another 401k.
Yeah.
But it's all medical expenses. So
Right.
like if you think about going back to your goals, you want kids. Kids are not cheap.
Right.
That whole process, and then down the road braces and stuff. Like if you start a few $100 now, time is so on your side.
Yeah.
So I'm a little crazy like that though. Which
Yeah, I mean that is so like the whatever percentile of people. Most people 27 are not thinking of an HSA. But I mean, but it does come back to as well is that you have friends like this. You have people where, I mean, sometimes it's an income problem. Like you're just not making enough money. Like you got to figure out, you got to figure out a way to, be able to be more valuable to the market, get a job that's going to pay you more money or whatever.
Skill.
Speaking of, you going back to school.
I am. Yep.
Where are we going?
We're going to Kellogg, Northwestern.
Stay in purple though.
Same shade of, so it's funny. Every time I tell somebody, that thought doesn't hit them immediately. Give it 24 hours, 48, and they know my personality because I'm like all about efficiency. Mm-hmm. They're like, "Oh, we see what you did."
Yeah, Yeah, Cameron's gonna, when he has kids, he's gonna do their initials on their shirt, and then he'll have to name all the kids the same name so he can use the same initials for the next kid.
I'm not that bad. Kellogg's a great school. I'm excited about it.
So you start in August, right?
I start the first week of September. I go out in August for orientation.
Okay.
So I have that.
Yeah.
And then
in Chicago.
Yeah. Never been to Chicago.
Oh, okay.
So I knew what school, and this is, from a risk management perspective, I didn't really manage my risk too well because I only applied to one school.
Right. Yeah.
We talked about this in the past on the podcast.
Yeah.
I looked at every program. This program I mean, it matched my type A. It matched all my boxes.
Yeah.
I knew this was going to be the best way for me to get a return on my investment.
Okay.
Is going to Kellogg. So I go in September and
See how it goes. How long is the program?
so it's self-paced because it's a part-time program.
Yeah.
I'm shooting for 2 hours or two years.
Okay.
2 years. So I'll be there for 2 years.
And you go what? You go like Friday, Saturdays? Or what?
So complete flexibility. Some quarters, because they're in the quarter system, I'll be fully remote. Some quarters I go every Friday, Saturday.
Okay.
And then I have optionality to go during the week too,
Okay.
depending on what classes I
We'll have
want
to
to take.
adjust our recording schedule.
Yeah. Friday. Yeah. We'll
We'll have to see.
be midweek.
Did you see that Disney bought Hulu, or like they bought, like they actually took,
They finished that
they
acquisition.
finished that acquisition?
Yeah.
So Bob Iger was on TV today for CNBC. It's hard for me. This is just complete honesty. It's hard for me to watch him and Disney and not be frustrated.
He's a good CEO.
I mean,
Stock price doesn't show it though.
yeah, I mean, it's been flat for 10 years.
Yeah.
I mean, it's just a frustrating stock to own. Like we always talk about, stocks that have done well and things like that, but Disney has just been a frustrating stock to own.
If you held it for 5 years, you'd be down almost 3% right now.
Yeah.
Which is kind of crazy.
Yeah, it's terrible.
I mean, he came back.
Terrible.
They still haven't even talked about, his transfer plan. Like he can't be the CEO forever.
I know, but he is a good CEO, but he hasn't been good at like that piece of it. He doesn't like to step away. When the last guy came in, he didn't even move out of his office. I mean, things like that. So, but let's not talk about a bad business like Disney. Let's talk about a good business.
Okay.
AirPods.
Oh yeah. Yeah. We talked about this. So
Yeah.
if you look at, where you're probably going to go into
I
this.
got the numbers right here.
So their revenue breakdown for Apple, if you look at what they share in their reports, it'll show you like it's a bar graph, I think. Mm-hmm. And there's a portion that says other hardware. The last 4 years, that other hardware is growing fast.
Yeah. I think it's good so when you think about investments, you have to think about the ecosystem of that investment. So Apple, it's not just the phones, it's not just the money that people spend on apps, it's all like the other hardware, so watches and the like, and then you have AirPods. So I have the numbers from 2023. I know they're more than this now, but in 2023 they sold $18 billion worth of AirPods.
Yeah. I think 2023 to 2024 they jumped
because they brought a new one. Yeah, because they went from like 18 to 22 or something.
$22 billion they make a year in selling AirPods.
So at $18 billion, do you want to know some companies that AirPods are big? Like if AirPods was its own business, okay, like forget Apple, AirPods is its own business, they would have more in sales than Subway. They would have more sales than Trader Joe's.
Yeah. Okay.
Which is 13.7 billion. They would have more than like Farmers Insurance, Racetrack, Guardian Life Insurance. I mean, there's Fox.
Okay.
Fox, they'd have more than Fox Media. I mean, there's a lot of businesses that they would be bigger than just on their own, which is pretty remarkable.
Yeah. No, I mean, there's big tech companies, right?
Yeah,
that
there's
don't
big
even
tech
make
companies.
that revenue.
Yeah. So it's just funny when everybody, I mean, it's just, I'm not going to say it's a side business for them, but it's, it's not their primary focus, and they're just,
They make it super. So all your thing about having the ecosystem, that's just making it sticky. Like that's the easiest way to say it is how do we make this environment sticky so the customer doesn't leave?
Yeah. I mean, like I'm on my 8th pair of AirPods.
Yeah. That's
Numero ocho.
We need to talk about this after the podcast because that's ridiculous.
I mean, I've left them in like my snow bibs.
And you found them?
And I found them a year later.
I was on the phone with you when you found them. Yeah.
I mean, it's just all kinds of things.
Man, you're talking like it's quarters in the cushion.
So, but somebody, Ben, a listener, was wanting me to quiz you on like just looking at largest companies and how the largest companies by market cap have changed over time.
Okay.
So some of these have changed the same, but who do you think had the largest market cap in 2000?
Oh, in 2000? I would assume
you weren't born yet, right?
No, it was 2 years. I was 2.
Okay.
Yeah.
Okay.
I was during the tech boom, so I would assume a tech company, and I would probably say like Microsoft.
That was it.
Boom.
Wow.
And you didn't even tell me.
I didn't even bring prizes.
You didn't even tell me you were going to quiz me. You try to get me to sweat.
No, I didn't even bring a prize. So Microsoft was number 1, GE number 2.
Oh, hold on. Oh, okay.
Okay, sorry.
GE number 2. I know there was like automotive was more involved at that time, right? Like Ford or GM? No.
No.
Okay, never mind then. All right, tell me number 3.
Cisco,
Tech.
Intel,
Those are all hardware too.
ExxonMobil,
Gas, yeah, that makes sense.
Nokia, and Walmart. Those are the
Nokia.
top. Those are the top 7.
Nokia. Where's Nokia?
Yeah, Lucent was number 8.
Wow.
So, all right. So 2010. You gotta think that's right after the financial
12
crisis.
years old. Yeah. Jeez. Like who's number 1? I don't think it was Microsoft anymore. That's
No.
for sure.
Actually, Microsoft. Yeah, Microsoft's
Number 5
number 4.
or 6?
4.
Okay.
Number 1 is Exxon.
Oil and gas. Yeah,
Yeah.
because the war. Good
Yeah.
point.
Not war. Oh, I mean, was it? I think it's just right after the financial crisis. So, but they did have like that was kind of oil's big boom with horizontal drilling.
Yeah.
So it's Exxon, PetroChina, Apple, Microsoft, Royal Dutch Shell, Berkshire Hathaway were some of the ones, and then 2020.
Oh.
This one's pretty close to what it is now.
Nah, I mean, I got biased. I love Google, but I know Google's not number 1.
No, they're not.
Yeah.
They're number 4.
Yeah.
We just talked about them.
2020. Apple.
Apple, Microsoft, Amazon.
I was gonna say
Google,
Amazon.
Meta, Alibaba, Berkshire Hathaway, Tencent, Visa, and Taiwan Semiconductor.
Yeah.
And so today, so guess who's not on
Semiconductor.
that list in 2020? The top 10? NVIDIA.
Yeah.
So NVIDIA has raced all the way up, and now NVIDIA is
anybody.
around. You know, right now it's Apple, NVIDIA, and Microsoft.
Yeah.
So it just shows over time how many companies. Like there's a lot of the companies that were in 2000. Where you mentioned it, you said they're hardware companies.
Yeah.
Weren't a lot of software companies. Now it's much more software related.
Margins are better. That's why.
Yeah, margins are better. And so it's interesting to see how this will
Watch that change again, even
It will.
more so. I think this is
It
going to be
always
a
will.
big shakeup. You know,
Yeah.
because you got to think about all the companies that are private right now that are valued at
Oh, yeah.
28 billion, 32
man, there's
billion.
some of those that I wanna
Circle,
be-
We didn't even talk about Circle.
Yeah,
IPO.
Anduril, you know.
Yeah, like all these companies that just have been holding private because the IPO market's not that great.
Which we mentioned a couple episodes ago, or however many year ago, or whatever. The reason we wanted to be in Goldman Sachs and Morgan Stanley
do all the IPOs.
is because of all the initial public offerings that they were going to do, and the dividend that you get paid to wait, right? So when you do kind of a barbell strategy, I mean, there's some really good companies in there.
You're buying with knowing you're not going to, I mean, it's going to be felt in a year or two.
Yeah. I mean, like
That's
I
the
think
name of the game.
that's the other thing that you know, many investors have to keep in mind is not every investment in your portfolio has to have the same goal.
Agreed.
Like you can have things that have different goals. You know, this is something for a couple of years from now. I want to see how this industry plays out, that sort of thing. And just making sure that you keep the risk of that to a level that you think is tolerable. So, well, I think you got anything else for a Tuesday afternoon episode here?
Market's up.
Yeah, market's looking good. Tomorrow is CPI. Thursday is going to be PPI, and we're still waiting for, you know, currently as we record this, there's no news out of the China. U.S. Trade talks in London, which everybody's kind of waiting on, which is kind of why you've had like the market just kind of hanging out today, waiting yesterday and today. But we do have some inflation numbers, so we'll see. But overall, the market seems pretty firm right now. I mean, I don't really see a whole lot of deals out there until you get some clarity on the tariff situation, what the bill that Congress or the Senate's going to pass, and kind of get some clarity on what taxes are going to be later on this year, those kind of things. So I think right now the market just seems to be kind of in a holding pattern.
Yeah, I agree. I think we're going to see some more news.
Oh yeah, there will be. I mean, I think that, you know, this is one of those times that if you had some companies that you weren't sure about, really kind of got nervous when everything went down, I mean, you should be looking at those positions, maybe raising a little bit of cash. That way, if volatility picks up again, you'll have the ability to take advantage of it.
I agree.
So, all right. Well, we will see you next time. Don't mistake activity for achievement. And we will see you next time. I messed that up. Did you see that? I just completely. All right. See you later, everybody. This podcast contains general information that may not be suitable for everyone. The information contained here should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented here is subject to change without notice and should not be considered as a solicitation to buy or sell any security. Ryder Equities does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstances. Past performance is no guarantee of future results.